Hi, everybody, and welcome to the weekly market wrap for November 3rd, 2017. Year's almost over. After Thanksgiving, things get a little bit choppy when it comes to the markets because of all the holidays and Fridays before the holidays, and a lot of people taking vacation. So we have about a month of real trading to go, and then it gets a little bit choppy. But we're entering a period that's normally pretty bullish, and we're entering it at a time on November 3rd here that the Dow, the S&P, and the Nasdaq have all closed at all-time highs. So a few weeks ago, and I mentioned this I think last week or the week before, one of the issues that we have, and it's not an issue, it's just kind of what the facts are, is that most people, when the market continues to go higher and higher and higher, start to drop out of the market, meaning that they're either uninvested or underinvested. Basically, they either have no money in the market, or if they do have money in the market, they wish they had more, or if they have any cash on the sidelines, they're kind of kicking themselves, including professional money managers. And as we're getting closer and closer to the end of the year, everybody wants to try and make their numbers. Everybody wants to make the statements look good. So what do? They go in with both hands and just buy as much stock as they possibly can. And I think that's where we're at right now. I think we're very close to a point where we're just going to see all the naysayers. The market's got to correct. It's too high. I think they may just throw in the towel towards the end of the year and just turn this move into more of a parabolic move, just straight up, can't believe how high it is type of deal. And um, and we may or may not get a blow off top at that point. But we're not there yet. We just have to ride the trend that we see, look at what the insiders are doing, follow them. It's been working. Our win ratio has been slowly but surely actually increasing to about 60, between 68 and 69% of the companies we put on the focus list. We've actually taken off for winners. So today, or I should say this week, a couple of things happening. President Trump names Powell as the new Fed chair. Janet Yellen's out. Kind of expected. Market didn't react one way or another to it, which is actually a good thing. That's what you want. You don't want to upset the apple cart, especially when it's doing so well. The the tax plan that was proposed by the House Republicans, it's interesting because the market, if you look at companies like, and I'll just kind of show you here on the chart, look at companies like Caterpillar. This isn't going to do it justice. Let me go to a weekly chart here. Okay. So we're talking, let's just say August, December, November started to go higher. But then all of a sudden, it started to accelerate. And that acceleration, I think, is in anticipation of the fact that corporate rates are now going to be 20%. Now, keep in mind, Caterpillar, just as an example, pays about 32% in taxes. That's their corporate tax rate. So these big old companies that actually make money and pay taxes are going to be the biggest beneficiaries of a 20% corporate tax rate. So what winds up happening is you get these big old companies that, hey, we're paying 30%, all of a sudden we don't have to sell another machine, and now we're paying 20%. That's straight to the bottom line. That could be a dividend that they pay out. That could be more investing into their own company. That could be buyback of stock. So these are just, they're not really like the tax plan itself, right? Is it good? Is it bad? I don't know. I mean, I personally think I'm gonna probably wind up paying more money in this tax cut than people just because I live in New Jersey and can't deduct my whatever. But the point is that the market looks at this corporate tax cut and says, hey, you know what? For a lot of these big companies, it's just a windfall of money, and that's why I think the market has been running higher. Now, what does that mean? That means that if this tax plan does not go through for whatever reason, look for the trapdoor to open. Companies like Caterpillar, Aetna, Anthem, some of these healthcare companies as well that pay a lot of taxes, they could be in trouble. So I think everybody knows it. So I think it's a low probability of not going through. But if for whatever reason Washington pulls its Washington stuff and decides the politics of it aren't good or whatever it is, and it doesn't get passed, that is the downside of this market. So I don't necessarily see that happening, but I don't know what's going to happen. So possibilities have to be at least part of your thinking. So if it continues and goes through, and I don't care what the details are. And I know normally devil's in the details sort of thing, but in this situation, I don't care what the details are. If a tax plan does go through, it's going to be positive for the market, and it has been. So that's really, in my opinion, the biggest problem that this market could have. So if the tax plan just gets beat up, doesn't go through, and gets pushed off to the middle of 2018. So the other thing that we have here is from a geopolitical event. President Trump is going to Asia. He's going to visit with China, Japan, South Korea, Vietnam. He's making a trip over there, meet with the leaders, talk about North Korea. So you probably hear a little bit more about North Korea, what's happening, and so on. But as you know from if you watch the videos in the past, it's not a reason to do anything. We just have to stick with what's happening. And what is working is that the market's going higher, being long works, following what the insiders are doing works, taking money off the table when you have the profits. And even in a week where we had all-time highs, we actually had to take a loss with the newsletter this week. So it's going to happen. Losses are a part of the game. But so far we've done quite well this year, and I'm really excited and happy about it. So hopefully we could end it off strong. And with all these things happening, it was really slow for a while, and now we're starting to heat up. And I think there's a higher risk, kind of to sum everything up, a higher risk of the market going parabolic higher than there is of some trapdoor opening and the market crashing. So keep that in mind. That's my thought. And hopefully, as time goes on, we'll just be able to keep on taking advantage of what these insiders are doing. So have a great weekend. Enjoy the last couple of months of the year. And I'll be back at you next week. Thanks.